All right, perfect. Thanks for being patient, everybody. There's a good group here, so everyone welcome to, a good conversation here about, who is the ideal client. You're all referral partners of ours, helping to, help various business owners, real estate investors. We appreciate you thinking of us to create value for your clients. And today, Nick and I just wanted to give an update on, who are the clients that we're working with right now? How has COVID and the pandemic affected any of the lending in the unsecured space? And hopefully field some questions from the group. So feel free throughout the conversation here in the presentation to chime in, whether you want to put it in the group chat or you want to just, unmute yourself and ask the questions. Either way is fine with us. I think the, interactive conversation will help everyone on the call to learn, just get a better feel for who, who we're helping and how we're helping clients today.
Yeah, kind of like what Eric said, appreciate you guys all jumping on. I'll talk a little bit more about what we're seeing here in the marketplace. We're going to go over, some client, examples, some things that we've done. Again, questions that you have, put it in the chat. Unmute yourself. We want to make sure that we're, answering all your questions and giving you guys some really good value here today.
Mr. Weber, how you doing? Thanks for joining.
How are you?
Good. Hope everyone's on their lunch break right now. I know we're all professionals and we all have from 12 to 12:15 to eat lunch every day. Appreciate you guys jumping on. So most of you know who I am. I'm the owner of MB. Been helping real estate investors since 2008 in the unsecured world. My partner and the lead funding strategist on the team is Nick. He's on the call as well. Nick, you want to add anything there for yourself?
Yeah, no, I mean, just, essentially helping real estate investors, business owners have access to capital to take advantage of opportunities. I think everybody here kind of knows what we do, and, today just kind of expand on it, some of the things that we're seeing in the marketplace, and, help your clients have more success. I do want to point out that, look at those updated pictures that we have there, looking good over there.
Absolutely. Well overdue. Long overdue.
Well overdue.
Thanks to Real Producers for taking those good shots of us. Josh Buchter, if anyone's in the Philly area.
If you need headshots, reach out to All Money Shots, Ray Vernon. He's awesome. We'll take really good care of you.
Yeah, we have fun with that shoot. That was right before the quarantine here. All right, so Nick already went through what we're trying to get at today is really just helping you just have a better understanding overall of what we're out there doing. So let's just cut to the chase here. Let's start talking about where things are now, as well as who are the right types of business owners and clients that we should be working with. So just from a high level, look, we're able to help and specialize in helping small business owners and real estate investors. About 70 to 80% of our clients are real estate investors, and the rest are just normal small business owners. What we found is that most small business owners are some way, somehow trying to invest in real estate or already doing it, and vice versa. Most investors are, they have another business that they may not have, that they may not have said right away, but after we start asking the right questions, you find out there's multiple entities there. So for the normal business owner, we help with working capital, especially right now, just having money for payroll, new employees, if they're trying to build up some inventory for different products. also business expansion. You know, right now there's some really good opportunities out there with this whole pandemic that, you know, we're talking to a lot of clients, a lot of small business owners that if they had an extra 30, 50, $75,000, they could be, you know, really taking advantage of the opportunities that are out there. And then I think also very important right now is the emergency / reserve funds, with everyone with a good percentage also slowing down in terms of their revenue. Just having that $50,000, $75,000 on the back burner as access in case, you know, maybe they weren't approved for the PPP, or they didn't get as much as they wanted for the PPP, or any of the economic disaster loans that the SBA is offering. And then in terms of the real estate investor, look, we're helping real estate investors in every aspect of real estate, whether they're just the fix and flip rehabber, or the person who's, you know, buying, fixing, and holding and wants long-term rental properties. A lot of our investors are using the lines of credit for gap funding, whether it be for down payment money, closing costs, any of the rehab funds. You know, a good number of our clients are actually combining or complementing our lines of credit with hard money lenders. So Matt Weber's on the call today. He's with Alpha Funding Partners, and you know, a lot of their clients need that down payment money. They may need 20 or 30% down, as well as reserves, to be able to pull the trigger on opportunities. So that's where we can help the real estate investor. Others are, you know, in a market where they're buying at a lower dollar amount. I was talking to a client yesterday. He has 2 projects under contract, and they're both around $23,000 purchase price. Right now, lenders aren't going to lend. You know, most hard money or collateralized lenders aren't going to lend on a $23,000 purchase. So where we come into play is helping that client get 50 to 75K within, you know, 3 to 4 weeks to go out there, buy the projects and solidify it, and then hopefully have excess to be able to use on the renovation side of the project. Nick, anything you wanted to add there?
Yeah, I mean, everything Eric just said, you know, is pretty straightforward. You know, what we're seeing with a lot of clients, you know, your business owners, your real estate investors, while there's downtime, you know, maybe their projects aren't moving, you know, their business is closed. We're seeing a lot of real estate investors who, like Eric said, maybe didn't get a PPP loan, or funds just haven't been dispersed to them. They're leaning heavily on personal credit. So a lot of what we're doing right now is, you know, helping position the business owner, the real estate investor, to kind of have access to business money, so that in a pinch they can use it, but not impact their personal credit. This way they continue to stay bankable, continue to stay lendable, so that once we're able to reemerge here, you know, they're still in a position to take advantage of opportunities. So if you're out there, you're talking to business owners, real estate investors, you want to make sure that they're keeping themselves in the right position. And that's why we've kind of been preaching, you know, and I always say that we're like a financial advisor for credit and capital. Let's make sure that if you need to lean on credit right now, that you can do so, but that you're keeping yourself in a good position to not impact business once we're able to come out of the house here. So, you know, let's make sure that, you know, we're doing everything that we can to have access, but to also use this time to sort of get our ducks in a row. Let's make sure that we're acquiring capital the right way, that we're starting to, you know, build up a game plan, so that, you know, once we let out, we can, you know, hit the ground running here.
Do you mind speaking to the state of our lenders? So what, you know, what we're starting to see in terms of in the unsecured space, and maybe some of the changes that have occurred since the middle of March, in the cycle that we've seen here over the past 2 months.
Yeah, and I mean, I'm sure, as a lot of you guys know, you know, a lot of what we do are, you know, traditional bank issued checkbook lines of credit, and, you know, 0% credit card models, where we're helping clients use 0% credit cards to liquidate it into cash, use it as, you know, working capital, be able to use for any general working capital purpose. So on the traditional lines of credit, those checkbooks, we've kind of seen a lot of those lines come to a halt. Most banks are dealing with, you know, mortgage forbearance or deferrals. They're dealing with PPP loans. So we've been on a little bit of a hold with the traditional checkbook lock. You know, I foresee it being a couple more weeks before we're starting to see applications on that front again. but we're also going to see a little bit of change in underwriting. So before, where we may not have needed so much documentation, I have a feeling that coming down the pike, we're going to start to need a little bit more in terms of, an actual, you know, tax return or financial docs or, some proof of income to be able to acquire those types of lines. So there's a little bit more fluidity there with the traditional lines of credit. In terms of credit card funding, we are killing it with credit card funding. We're getting a lot of clients access to 0% funds to be able to use to weather the storm, to be able to get into that next deal. I have a lot of clients that are calling and, something may have happened with their hard money loan. I had one client that was due to have a $30,000 draw dispersed to him. And because the hard money lender needed 6 months of reserves now on their account, he only received $9,000. So he was scrambling around for the extra $21,000 to complete his job. We're starting to, really preach to clients to be positioned the right way. Lenders they're definitely, I want to say tightening, but they're tightening a little bit. And if they can, lend to somebody who's a little bit positioned better than you, then they're going to give the money to the less risk. So we're spending a lot of time making sure that we're positioning clients the right way so that we're still having success. And we are still having success. I mean, we're getting a lot of clients funding to be able to go use now currently. So, there's definitely some changes coming, but we're still seeing good success in the marketplace and still, positioning clients the right way.
And the one thing I'm going to add there, especially with the credit card model, is, we're just setting the expectations properly, because 3-4 months ago, we would have 95% of our lender responses back within 7 to 17 days. So in that 1 to 2.5 weeks, we would have the full results back. I think banks, from a resource perspective, are lacking due to what some of the SBA stimulus packages are out there. So we are seeing a little bit slowdown in the underwriting from, across the board. So the average time now is a little bit closer to probably more like 14 to 24 days. So you're adding an extra week there on the back end, and some banks are even taking up to a full 30 days to respond. So like Nick said, we're just setting the expectations with the clients. If they have an opportunity and if it's a property that they have to close on in 2 weeks, it's probably not a good fit for us to help them on that particular project. However, we're going to explain to them, you still want to get set up with lines now, because you want to be in a position when the next opportunity comes, you can pull the trigger, or you could use what we help you get for the rehab portion of a project prior to the draw through the lender. So just know that we are setting the expectations right, saying 3 to 4 weeks for funding, where it used to be, within 2 weeks or so, most of the lenders were coming back. Average approval amounts have not changed. We're still within the first 30 days. We're still in that $55,000 to $75,000 range overall with funding on the 0% credit card model. So we're not seeing a decrease in approval amounts. It's just taking a little bit longer for all the results to come in. So as it relates to ideal credit profile, I know you know this, but this is just a quick reminder. And something Nick had said a few minutes ago about taking an extra week or two, or even an extra 30 days to make a credit file more optimal than we would have 6 months ago. So I want to just as a reminder, as a starting point, we want all of our clients to be 680 plus. Ideally, 700, 720 plus is better than 680 or 690. So if there's a few things that we could do to get that client's score above that 700 mark, we definitely will take the time to do it. And more important than the credit score, because we always say it, the credit data is the key. You can have a 750 score or an 800 score, but if these 4 areas underneath all this data, if one of these are out of whack, for instance, we had a client last week, 743 FICO score, but his credit file was only 2 years old. He has 3 credit cards from 2018, and that's it. No loans, no student loans. 24-year-old with very minimal credit history. We can help them, but we're not going to hit a home run with that client. and we're probably going to focus on building that personal credit stronger so that, years down the line, he can start to have success on the business side. So we definitely take a look at the age of a credit file. On the business side, business lenders want to see you have at least 7 years of credit or more. Inquiry standpoint, we want to see less than 3 inquiries within the past 6 months. We do work with a third party who does inquiry removal within about 45 to 60 days. Once again, relying on the credit bureaus and the staffing there. But if someone does have a high number of inquiries, as we run into a lot with investors, we can get those cleaned up. Major derogatories are, almost an instant denial. If someone has a bankruptcy or an unpaid collection account or like a tax lien public record, they're going to more than likely be instantly denied with majority of the business banks. If there are late payments, so minor delinquencies, if they're outside of, 12, 18, 24 months, the older they are, the less they mean. We have had success with someone who had a late payment from 18 months ago. But if it's older than 2 years, that's ideal. And then the revolving credit usage, which is credit card usage. So how much of your credit cards are you using versus how much you have access to? We want to see that under 30%. In these times, the lower the better. This is an area where banks are being very particular. So if we can take an extra week or two and have someone creatively restructure their revolving debt so it looks like they're 15% utilized versus 35 or 30% utilized, we're going to do that and take the time to do it with a client.
Hey, Eric, I have a question.
Yes.
How are the credit bureaus handling agreements that borrowers are making with their mortgage companies on deferrals or deferments of payment? Are they dinging them? Are they coming 30 days late? And are borrowers required to prove that they have agreements from their banks to make these late payments as a result of the virus?
Yeah, that's a great question. So what we've seen is, it depends on the lender. So we have seen a client where, they went on forbearance, but in that first week and a half, it reported to the credit bureaus that they were late. So they had to go back and actually get a letter from get the forbearance letter from the lender, send it into the credit bureau, and it kind of pushed back their funding, almost 2 months. Some other clients that are on forbearance, they're not getting dinged yet. But one of the things that, talking to a lot of underwriters, lenders, that you got to be careful about with the forbearance is the forbearance being tacked onto the end of the loan, or is it all just due on day 90? So, some people are actually thinking they're getting 3 months tacked onto the end of their loan, but they don't realize that after the 90-day forbearance, the 4 months are going to be due come July. So, be very careful about the forbearances. At the moment, most lenders are not reporting it, but be careful once the forbearance is due. If you're not either have an agreement to modify the loan, or if they're not tacking it onto the end, we may see a lot of people get a lot of late payments come month 4 after the forbearance start. So we have seen it with a couple clients where it has reported. Majority of them aren't, but I'm curious to see what actually happens 2 to 3 months from now once all those forbearances come due.
Yeah, as a follow-up to that, as an add-on, for clients who are asking, should I go into forbearance? I could probably make the mortgage payment. I have some reserves. Do you think I should just go into forbearance and save the $2,000 for a few months? I'm recommending not to do that because of the fact that we are seeing in the remarks section of a credit account that, this account is in forbearance. And it's not a good thing for a bank to see that it's in forbearance. So from an underwriting standpoint, not that we've seen it directly yet, but we will. I do expect to see banks to deny for the reason of, a forbearance on the credit file, or I'm going to call it a derogatory. I don't know what else to call it, even though it's not a derogatory and it may not be affecting the score. If an unsecured lender sees that, they're gonna be more concerned than if they have the same credit profile sitting next to them without that word forbearance on it and it's a clean file. So I'm recommending not to do the forbearance to anyone who can, any business owner that doesn't need to or may have some cash setting aside. Use up the cash. I'd rather see your ratio. I'd rather see you use some of your personal cards to pay the mortgage versus get that forbearance word on your credit.
Right. And at the end of the day, listen, you got to,
Can I ask a question?
yeah, go ahead, Jay.
Sorry, Nick, I didn't want to cut you off. You were saying that if you're applying for a new credit line, 30% or under. We had a few weeks ago, I had a good talk with Eric about keeping those credit lines that I already have. Are these rules still the same? Basically, you don't. I gave you an example where Bank of America took away almost $40,000 from me 2 years ago. Are these rules still the same to keep the existing credit lines? And maybe we can go over those percentages also. Thanks.
Yeah, you definitely, yeah, great question. You definitely want to be using your cards and your limits. You want to be staying under that 30%. Right now, we want to make sure that we're not giving a credit card company any reason to lower our limits or cut our lines. You know, I read a study that, you know, since the whole coronavirus started, I think 50 million credit card holders have had a line cut. So we want to make sure that we're doing everything that we can to use the cards responsibly, be, you know, on time with payments. Let's not give any lender a reason to cut our lines. As long as you're using the lines the right way and not being, you're not abusing it and, you know, making payments and not being late, you know, we're not going to have an issue. But let's just be smart. And that's why, you know, if we don't have to put a deferral on a credit card and we can make the payment, make the payment. You know, sort of what Eric was saying, if you have to do a forbearance, you have to do what you have to do. You know, we'll help you on the back end through credit repair, try and get that remark removed or whatever we need to do. But if you have the ability to make your mortgage payment and make your credit card payments right now, make them. It's just going to keep you in a better position here moving forward. But listen, I've talked to a lot of clients where they've had to make maneuvers. So if you have to go on forbearance, if you have to do a deferral, listen, you got to do what you got to do. We'll help you on the back end, kind of clean it up, but just know that, you know, it may take a little bit longer to clean some of that stuff up.
Right. Yeah. And if you have existing lines, what I would recommend if they report on the personal credit, overall usage, I wouldn't go above that 30% ratio if you don't have to. And then on an individual, so if you have a Bank of America card, right, it's a $20,000 limit, try not to go above 60% utilized on that. So even if they're offering you 0%, write a check. Don't write a check for 19,000, knowing that the limit's 20. Write a check for 11 or 12,000. Try and stay under that 60% mark on any individual line. Just good rule of thumb and in practice, because if they see you at that 90 and then it stays on there for a few months in a row, they may start to consider you high risk and might start to chase the balance down, or chase the balance, which is lower your limit just above the balance as you start to pay it down. So you gotta be real careful there. But we are definitely recommending on the business side, tap into your lines. If you have them, tap into them. I don't care if you're paying a couple extra percentage points of interest. The last thing you want to see happen is watch the account close because of lack of use.
Yeah, definitely just pull the line, put it into cash, hold it, make the payments, pay it back if you need to. But, you know, on the business funds, pull as much of it and hold it in cash as you can while keeping your personal credit intact.
Any other questions so far? Anything that we didn't talk about yet?
Yeah, good questions, guys. Appreciate it.
These are just some examples on here of clients that we've helped recently, and, you know, give you an overall idea of the fact that banks are still lending and, you know, we're still having success. This client was in April. Yeah, he had a 3-year-old LLC, a real estate investor right in Bucks County, PA. And within 12 business days, we were able to get him access to $90,000 and 0% credit card funding. You know, we didn't go after any traditional lots at that point for him because some of the changes had already occurred. But in the next few weeks, we should be hopefully in the next few weeks or 6 to 8 weeks, we'll be applying for one or two $25,000 to $50,000 checkbook lines with this client. This was a fun one too. 1 month old LLC, husband and wife partners. They just created the LLC combined. They got 124,700. Once again, 0% funding. They're investors that are trying to build a portfolio, so they're going to use it. If anyone's familiar with the BRRRR model, where you're buying cash, renovating cash, getting the place rented out, and then refinancing it back out, they'll be able to use this 124K as the down payment to get into 2 or 3 deals at a time. We have a trash removal company that we helped less than a month ago. They have a 5-year-old LLC. They received a $100,000 checkbook line of credit with one bank. Pretty streamlined. Their approval came back within seven days, within a week. And then we have 2 other lines of credit pending for them. We're expecting them to get another 25 to 50 times 2. So they may end up with 150 to 200K within about 30 to 45 days.
Yeah, and that, at the time it was no doc, no tax returns, no financials, just, good personal credit for him and his wife, as they were co-owners on the LLC. So no bank statements, nothing like that, just good personal credit, age of history, boom, we got them 100K pretty quickly.
And then another investor up in Jersey City, North Jersey, 5-month-old LLC. She got $75,000 in between 3 different cards of 0% credit cards, and that was right in the middle of the pandemic. And she's going to use that to. I mean, she's one of the, in that 20-30% of the people that I'm talking to that are like, man, there are so many opportunities out there right now. She's already excited because clients or sellers that she was putting in offers with, say in December and January, didn't even counter back because her offers were so low. When she's following back up with them now in April and May, she's finding that they're actually countering back and getting pretty close to her low ball offers. So, like I said, 20 to 30% of the clients that we are talking to, especially the real estate investors, they're knowing that there's opportunities out there right now. Unfortunately, 70 to 80% of the people that we're talking to, they're feeling the uncertainty. And we're just trying to coach them on the fact that now's the time to get positioned because the opportunities are there and there's even more that are coming.
Yeah, and not only just positioned with us, but, for a lot of our investors that are using hard money, get pre-approved with hard money as well. Understand what it is that you're going to need to be able to get into a deal. Because not just changes in, the world and, lending in general, but, also changes in hard money affects what type of funds we need to acquire for you and how much. With more hard money lenders needing you to have reserves and funds seasoned and, are doing lower, loan to value loans, we're going to need to have more skin in the game. So we're going to need to have bigger down payments. We're going to need to have cash sitting in the bank account. So investors who I was talking to that was sitting with a lot of cash didn't really want lines of credit because they like to use cash. Well, now they're reaching back out because they have all their cash being deployed into deals and need more reserves. So, start thinking, 3-6 months out, if you're in a deal now, the terms may be a little bit different into your next deal. So start to position all around hard money, long-term rental loans, who's still doing them. If you're doing the BRRRR model and, you're banking on that long-term rental loan being there on the back end of the deal, make sure that it's still there. A lot of those lenders have stopped long-term, just debt service, coverage ratio loans on rental properties. So do we need to go to a bank that's going to require more paperwork, more legwork to get a refinance done? Start to plan all those things right now because we're seeing tons of clients kind of start to hit those roadblocks.
Any other questions out there? Connor, what's up, man? Long time no chat. Nick, anything else you think we might have missed here?
No, I mean, I think it highlights that we're still getting people funds. I mean, for what we're doing, uh, clients are still having success. So any client that you may be working with that, they may not be ready for funding right now, but let's start to get those ducks in a row. There's clients where, like I said, we need to take a little bit more time to prep them. So the sooner we can get the introduction made, we can start to work with them, take a look at credit, see what needs to be done. The faster it is that we're going to be able to get them in a position for funding, and then ultimately, get you guys paid on that referral. So, the more we can talk to people early on and start to prep them for what some of their goals are, the and if anybody has any questions, feel free to go. Any questions you have about credit, anything about, current state of anything, we're here for a few more minutes. We're happy to answer anything that we can.
Cheryl, thanks for tuning in. I see. Hopefully, I know Colorado is starting to open up out there a little bit, coming off the lockdown. So hopefully things are starting to move out there again and you're staying safe. Nick, anything else you wanted to add? Any reminders?
No, pretty straightforward. Like we said, everybody knows how to send clients over to us. Our next, kind of ideal client referral partner webinar, we're actually going to show you guys how we're going to start to expedite the pre-qualification process. So moving quicker to get clients pre-qualified so that they understand what we can do for them. So, some interesting things coming down the pike in terms of what MB is doing to, be able to pre-qualify clients quicker, get them into funding faster, get them funds, access quicker. So, basically, just refer the client over and we'll take it from there and help them out.
I do have a,
Sorry. I just changed firms a couple months ago, and I'm running business development for an entire accounting firm. Are you guys going to send this in a recording? I'd like to share it with our real estate group for all their clients, or I don't know which one is better, of doing a new Zoom call with you and the firm, but just if you can give me some more insight on that.
Yeah, so we will be sending this out to anyone who signed up for the webinar. This is being recorded. We'll send out a copy of it. If you think it would be better suited to do a webinar for your group, then, we're more than happy to do that as well. Whatever you think is more valuable. With there are some things that we talk about a little bit differently on when we're talking to a brand new referral partner of ours. So I actually have a webinar tomorrow at 11 o'clock for, people who are interested in becoming a referral partner. So I'll dive into more detail specifically about the products that we offer and the services that we offer, where today we just kept it high level, quick reminder, and then just, just giving you examples of how we're still helping clients and what avenues are working right now. Yeah,
okay. Yeah, I'll take the
problem.
recording and put it in front of the key people at our firm. And then once they get back to me, then I'll get back to you guys and set up a joint webinar.
Perfect. Thanks, Julie. Appreciate it.
Sure. No problem.
And Diallo, how's everything going with you? Jake, give me 1 second, then you can go. Diallo asked, what's the minimum amount that you can get for a client? So, basically it's all based on the client. So what I'll say is typically, the minimum we're going to try and get is 25,000. If a client needs less than that, we're happy to give them guidance. A lot of times it's just kind of putting them in the right direction. I had a client last week where he only wanted $2,500. So, we essentially just gave him a link to an application to complete to be able to get him the funding without charging him, and just did right by the client. Typically the real estate investor, the business owner that we're looking for, we're starting at that 25K range. And typically, our sweet spot is getting anywhere from 25 to 150 within 30 to 45 days. So, And then, of course, when working with the client, we'll help them grow that over the course of time. There's clients where we started with 50, 75,000, and over the course of time, we put in a couple $100,000 in place for them. But, typically when we get started, we're looking for that client that we're at least going to get them 25,000.
Thanks a lot.
Yeah, no problem. Yeah, Jay, what you have?
I don't know, did you send an email out already, but I would like to be on that phone call tomorrow, see the program that you have for. No, we brainstormed with Eric and we brainstormed with you, Nick, how could I refer it to my team and agents. So little feedback on that. I think it's too pricey for them. I did.
Am I losing them on my end, or are you
To
too?
understand
Nick?
for.
Might have been all of us. I lost them as well.
Can you hear me now?
I can hear you now.
Yeah. Yep.
It's easier to explain it to my investor friends and business owners when I talk about MD Capital, but for regular agents. So I have a lot of agents that I talk to, but it seems that it's little expensive, the service that you have. And when we talked, you guys mentioned that you might have like video courses coming out or something that you are not so involved, but basically showing the path or showing the direction for less money. Do you have anything set up already, or do you have anything like planned on those things, or not yet?
Yeah, so we're definitely working towards rolling out more of a streamlined process, and where it can be like more of a do-it-yourself type, where they're not getting so much of the coaching on the back end from us. And I always tell clients, if you're looking at it in a vacuum, our fee, if you're just looking at it as a one-off transaction, it may seem pricey. But if you use those funds more than once, and if you use them 3, 4, 5, 10 times, for what we do, the value's there. It's not really costly because you only pay us for that one-time fee, and then you're also getting the coaching on the back end and us as a resource. So, if it's just a one-off in a vacuum, it may come off as pricey, but, I think we do a good job in terms of our team, illustrating the value that we provide, not just.
So Nick, real quick, just to
use it as well.
purposefully cut you off. Jay's talking about his real estate agents, so the realtors in his group who may not be using it to go out there and invest in a property, but might need, $15,000, $20,000 of additional access right now to stay afloat while they're in the middle of a downturn in their market.
Gotcha.
Correct. And I'm actually, I know your services and I've been using those and I'm very happy, and you both coach me a lot. So I'm super happy with the services. And like I said, it's easier to explain it to a business owner or a flipper or an investor, but for an agent, they just need their 5,000 or 10,000 and they're like, so that's why I was asking. And we kind of talked about it, but I just wanted to know, is there anything coming?
Yeah, and there is some stuff coming similar to what we're doing to pre-qualify clients a little bit faster. We do have a platform that we're going to be implementing where it's almost a little bit more do-it-yourself, where for a one-off fee, you can start to build up business credit, build access to cash lines. So there are some interesting things coming down the pike to where, for that type of business owner or professional, we're going to have some options for as well.
Okay, perfect. Thanks.
All right, great. Anyone have anything else? We're almost 12:45 here.
Cool. Listen, I appreciate everybody joining today and taking some time out. It's not always the easiest thing at 12 o'clock on a Wednesday, but appreciate you guys joining. We will get out, a copy of this. So, any questions that you guys have, feel free to reach out to us. We're happy to answer anything that you have. Anything you wanted to add before we jump off here, Eric?
Yeah, the one thing I want to say is, guys, we are offering a promo for anyone on this call, and you're already set up as a partner of ours. For anyone who sends a referral over by the end of today, so by midnight tonight, we'll add 5% to your referral compensation. Just to appreciate you guys jumping on, making sure that what we're out there doing. It's always good to see a lot of the people that I talk to throughout the days and the month. So I appreciate you guys, paying attention and wanting to learn more. So as a response to that, any referrals given by the end of today and by midnight tonight, we will add 5% to the compensation, to the normal compensation model. So get out your Rolodex, look at your email, see who were people that might have been a good intro, but you never made the intro. If you send them over today, whether they start funding tomorrow or, 3-6 months down the line, it'll be in our system to make sure that you get paid the extra 5%. All right, guys, have a great day. Get back to your normal days. And if there's anything we can do to create value, let us know.
Thanks, everybody. Appreciate the time.
Thanks a lot.
Thanks a lot.